Your market news now. Bonds were calmer after a pause in a relentless sell-off on higher for longer interest rate worries, helping shares edge up as investors hope for a subdued U.S. payrolls number. The Hang Seng Index jumped as much as 2.3%, but is still set for a fifth week of losses. Chinese markets remained shut for a week-long holiday. Meanwhile, in commodities, after talks of an oil price hitting $100 a barrel, crude was up 0.3%. at $84.31 a barrel, but faces its steepest weekly decline since March as markets worried that higher for longer rates would crimp global economic growth and hit fuel demand. For more perspective, we are joined by Jameel Ahmad from GTC. Jameel, thank you so much for your time. Let's get a sense of your perspective when you look at global market sentiment ahead of the U.S. payrolls figure. What's your screens telling you?
Thank you, Nastasia. It's definitely been a very interesting first trading week of the final quarter of 2023 because we've had steep falls in global markets based on this higher for longer fear when it comes to interest rates. We've had the gold price that's declined now close to $100 over just the past 2 trading weeks. And of course, we've had the steepest sell-offs and declines in US oil for a number of months as well, again, because of global growth concerns. So I do think there's a lot of anxiety in global markets because nobody's sure where things are heading, whether that's due to inflation or interest rate expectations. However, the market is now looking for guidance from the US non-farm payroll report in roughly 2 hours from now.
Speaking of that guidance, what figure is the market looking for, and what are the scenarios here if that figure is higher than expected or even cooler?
So the market's actually looking for roughly 170,000 jobs to be added for the United States economy over the month of September. But this is one of those data releases, Nastasia, where the devil's very much in the detail. Because of inflation concerns, every economy is concerned about it. They're looking for elements such as the average wage growth, have earnings increased, and so forth. But what we have seen in the days before the non-farm payroll is a little bit of profit taking on the US dollar, which has eased some of those global market routes. But this is also based on some expectations from the preliminary jobs report, which is the ADP employment change, that the private sector actually added the least jobs to its economy since January 2021. So this might be the signal that the US economy is finally no longer be able to buck the trend and might be slowing down its side. Because one of the issues for all of us right now, whether you're holding South African rands or British pounds, or no matter where you're sitting or viewing this interview, is the stronger dollar environment. And concerningly, it is getting stronger. The dollar did hit its strongest level since late 2022, earlier this week, but we have seen a little bit of profit taking over recent days. If we do have a much weaker figure, this might be the signal that we're going to have a bit more currency relief over the coming trading rest of the month.
It's a Friday. When you look back at the week, was there a key theme or company news that caught your attention?
We're certainly watching what's happening with FTX and what that might mean for the cryptocurrency asset class over the medium and longer term. But generally speaking, volatility there hasn't been very high because we're not seeing as much headlines so far. But this might be a court case that might run for a number of weeks and months. We never know with these things. Generally speaking, what we are quite surprised about is how steep and how aggressive the decline in gold has been. Gold prices have fallen more than $100 just since the last trading week of September. Generally speaking, it's that higher for longer interest rate environment that's led to this decline. But generally, when you have the bonds falling to the extent they are, the treasury yield rising, it should actually strengthen gold because of global market uncertainty. But because every trader right now, best friend is the US dollar, and they're carrying US dollars, gold prices have hit the floor, and that's been quite an unexpected twist.
I wanted to ask you, we've been talking about how the third quarter was such a torrid time going into the fourth quarter, or the fact that we are in one. What is the one thing that could have a material effect on the market, or at least drive the direction of it in the fourth quarter?
Torrid is an excellent term for how the third quarter's been. And I think what's concerning us right now is you look at the global economy slowing down. There's no doubt it's happening. And the biggest question is not how bad things might get. It looks like we're going to have a period of distressing and depressing growth, but how long this might last. One element here that has been somewhat of a shining star globally has been how well the United States economy has performed. It's surprised everyone, and it's led to expectations from institutions, wealth managers, and so forth, investment banks, all pushing back their expectations for when the United States might finally start cutting interest rates, which would help all of our economies, generally speaking, just from a currency and inflation perspective alone. So what would cause a material impact and support us somewhat is if we do finally see some signs of data turning lower in the United States, like the unemployment report in just a couple of hours from now. That would perhaps provide a little bit of early Christmas cheer as we do begin to unwind what has been a difficult 2023.
As we wrap up, in a higher for longer environment, is it possible to make money?
If you're a bank, the interest rates are certainly helping the banking environment. Again, one trend, if we talk about the everyday man on the street, there's one thing that we always say in technical analysis is that the trend is your friend. And the only trend and the only best friend that investors have had so far has been the US dollar, which has punished so many global asset classes, whether we're talking about global markets, currencies, emerging markets, the price of gold in recent days. And that seems to be where the money's being kept.
Just quickly, going into next week, is there one piece of news that you are looking out for?
Yeah, excellent question. Actually, we're going to be paying attention to China over the weekend. China's been on the national holidays this week for the Autumn Festival. What we are looking out for is some of the foreign exchange reserves data, because there have been indications from the People's Bank of China and the Chinese authorities, some sort of discomfort with yuan, the Chinese RMB currency weakness. Again, emerging markets are suffering from a stronger dollar. And we'll be watching whether they are considering intervening in foreign exchange markets. We haven't got there yet, but that's one thing we're going to be looking for. Second thing is what's exactly happening with the Bank of Japan and the Japanese yen, because we had a sudden crash in the yen just a couple of trading days ago. This was the same time Bank of Japan and specifically the Japanese finance minister were warning about excessive weakness in the yen. But so far, we haven't had any answer as to what caused that sharp decline in yen. So we were looking for that too.
Jameel, thank you so much for your time. That is Jameel Ahmad, who is the chief analyst at GTC. And just looking at the dollar, rather at the rand, 1934 to the dollar ahead of that US non-farm payrolls report. We're going to take a quick break. When we come back, we'll have SME on point.